So guys, 2020 was DeFi, 2021 was NFTs, so what will be the next crypto craze for 2022? Well, if you ask me, I'd say layer 2 cryptos. We saw glimpses of it back in 2021 with Polygon, Maniac, ETH 2.0, and so forth, but we're still some ways from this being a new trend as people are still asking the question, what is layer 2? What can you do with a layer 2? What does this mean? Well, in short, layer 2 is basically compressing a bunch of transactions and posting it to a layer 1 Ethereum instead of processing each transaction on its own. So basically, layer 2 solutions increase transaction speed and reduce gas fees, which is what we're all dying for. Popular examples of Ethereum layer 2 solutions include Immutable X, Polygon, and Polkadot. But these projects already saw their all-time highs, so to invest in these wouldn't be the best idea right now. With new trends, you always want to find the diamond in the rough, that coin with good fundamentals and actual use cases. And luckily, I think I found that coin that will lead the layer 2 rally. You don't want to miss this one, guys. I bet most of you missed DeFi 1.0 and NFTs, so don't miss layer 2s also. So hit that like button, turn on the post notifications, and let me introduce you to the project that may very well be the front line for layer 2s. Now guys, today we'll talk about Synthetix, or SNX, whichever one is easier for you to pronounce. Now, when you think about what SNX targets, which is the derivatives market and the market share, now, if just a small slither of the percentage coming into the crypto is redirected into SNX, that would send it to unimaginable highs. And I personally think that the chances of it happening are becoming a lot more possible as the ecosystem grows and the DeFi continues to evolve. I know I may be wrong, but it all comes down to the tech being used, adopted when it comes to these altcoins. Personally, I can see SNX becoming something massive as we continue to evolve for 2022 through to 2023. So where was SNX all this time? Since being released in 2018, SNX has fallen off almost everybody's radar because of crypto derivatives is still in its infant stages, but many in the future will regret either not buying SNX now or releasing their previous positions. SNX price could go into the thousands in the future. I strongly believe this. Why and how? Synthetix has shown a clear mechanism on how you can get exposure to the performance of assets without actually owning them. It's quite the clever system. The native token is called SNX, which you have to own in order to mint a synthetic asset. It's similar to DAI, in which you use ETH to mint USD pegged DAI. However, DAI employs a series of incentive and disincentive decentralized arbitrage-based solutions to achieve the peg. It can often be quite complex, and the system has also flirted with melting down completely. However, Synthetix employs a radically different approach where you lock SNX and mint SUSD, synthetic USD, so you're effectively borrowing the SUSD. However, unlike DAI, there is no interest. They simply say that the SUSD is worth $1 and it will buy you stuff worth $1 on their platform. SNX, on the other hand, fluctuates in value based on demand and supply, but the value of SUSD is always $1. Now, SUSD is ERC20, and nothing prevents you from taking it out of the system and using it elsewhere. And in theory, nothing prevents others from buying and selling it at a price different to $1. However, within the Synthetix ecosystem, it will always buy stuff worth $1. Which means the value of SUSD is based on the success of the Synthetix ecosystem. Obviously, the more likely that you'll be able to achieve what you want on Synthetix that is worth $1, the more likely the peg stays in place outside the system. So what else can you do on Synthetix? Well, you can buy other synthetic assets using your SUSD. For example, there could be an S-Gold or S-Apple you want to purchase. How do S-Gold and S-Apple reflect the price of what their real-world counterparts have? Simple. Synthetix says that they do. At this point, it starts looking like a mad scheme. You're probably wondering, who are you even going to trade with on such a portal? But trust me, there is a method to their madness. The first thing we need to understand is that in Synthetix, you're not actually trading. You're simply converting from one form of synthetic asset to another. If you're confused, don't worry, it gets simpler from here. Okay, so when you lock in SNX, you're able to mint SUSD. However, any asset has to be 800% collateralized, which means if you have $800 worth of SNX, you'll be able to mint 100 SUSD. Now, if your locked SNX goes up in value, then you're able to mint more, kind of like accessing the equity in your house when its price goes up. In contrast, if your SNX goes down in value, then you have to pay up, else you risk losing your collateral. Now, you want to trade SUSD to some other asset, let's say Bitcoin. You can get BTC worth $100 at that point. However, you do not get actual BTC. You get SBTC, synthetic BTC, which traces the price of BTC. You're not trading USD for BTC. All you're doing here is destroying your current token and minting a different token of the same value. However, the value of BTC might go up faster than USD, but the underlying pool of collateral, which is SNX, has not changed in value. So where does your increased value come from? The answer is simple. Tokens are effectively a debt against the collateral locked. So if everyone shoulders the debt equally and someone is deriving more value from it, the converse is that someone else is suffering. If BTC went up, then those who did not convert to that asset would end up sharing an equal prorated portion of the debt without getting any equivalent upside. They would suffer so that those who made the right choice benefit. To some extent, it replicates what happens in a normal trade, so I would not call it an unfair process. The system has some clever mechanisms to create value for the SNX token by ascribing fees from transactions to token holders and also incentivizing liquidity for SNX by rewarding liquidity providers on Uniswap. It also has a clever way of rewarding people to come back repeatedly to the platform and stay there by giving away SNX tokens to users and vesting them for a year. Kind of like a coffee punch card, which gives you a free coffee after buying 9. So in conclusion, SNX Synthetix is making moves, the biggest of which is integrating ETH loans on the layer 2 of the network through a staking DApp. These loans will give investors more room to navigate the numerous investing options that they've introduced. Investors can also access financial risk management solutions directly on Synthetix protocol, thanks to a partnership with Gauntlet, a simulation platform. That means average investors can leverage the power of SNX to apply deep analysis to optimize capital efficiency. Guys, Synthetix has been slower than most altcoins to recover from the losses of early 2022, but in my opinion, this is a play for the long haul and should be something you just buy, forget, and become rich in the future when layer 2 starts trending. Let me know what you think in the comments. Also, remember to hit that like button, and I'll see you in the next one.